So let's move into the third component. I'll just toggle that back. Let's move into the third component of Cash Manager, which is the cash flow forecasting. Now, one of the biggest problems with cash flow forecasting is this to and fro with Excel, and quite frankly, it's often hard to do a cash flow forecasting quickly and easily off the budget, but it's even harder to do a cash flow forecast off a budget that now has the actuals, and I'll show you how quickly we solve that. All right, so you'll notice there's no cash flow forecast. It's pretty easy to solve this problem. All I do is I add a cash flow forecast. It will say to me, well, would you like to specify what the new cash flow forecast should be based on? Let's base it on the business system budget. I create the cash flow forecast. It says this will create a copy of today's budget as a new budget revision. I want to proceed, and I'll just set that as is, and it dumps it under my save cash flow forecast. So that creates, everybody, a cash flow forecast over the next 12 months. But also, I can also view it over 24 months if the budget within the financial system is over 24 months. That could be quite useful to some accountants as well. So it depends on your budget as such. So you'll also note here, there's my actuals all the way up till September, October. I don't know what day, November it is, sorry, because that's where we are. And there's my cash flow forecast. So you can see how quick and easy that was there as well. Now, a couple of points here, everybody. You'll notice here, there's something called delayed days. What this means is this comes from the account group setup under administration. You set up account groups there, and you decide, or the accountant decides, how many days delay there will be across the sales income, or the engineering income, or the income in general, or the expenses. You decide how many days delay there would be. And what that does is, once we've had that, Cash Manager then uses a formula to work out the effect on the cash flow as a result of those days. So that's the first point. All right, let's add another cash flow forecast, but this time with actuals from that budget. So we'll just go and add a cash flow forecast. There we are. And this time we're going to choose it off the updated. Remember that one we created? And we created a cash flow forecast. And what I can also do now is I can change the days delay here. So I can say, well, hang on, everybody. What if I actually brought in my sales income instead of 50 days, which is ludicrous? What if we got our customers to pay us within, say, 14 odd days or 15 days? And also, quite frankly, when it comes down to service income, there's absolutely no reason why our customers are paying us 60 days. That should be a payment on invoice, which let's call it 7 days. I'd like to see that impact. And then perhaps with our expenses, well, quite frankly, I'd like to extend that. Maybe we'll make that, I don't know, 60 odd days. And so what that does is that allows me to create a cash flow forecast, and that'll save that under my save cash flow forecast. And that'll change the cash flow here on the bottom, of course, and it'll also change the cash flow at the end of the financial year. Of course, being in South Africa, this financial year will obviously be end March, but here in Australia and New Zealand, it's June as such. So I hope everybody saw that and understands exactly what that impact there was as well was as such. And again, I can go back to that cash flow. I can edit at any given time. I can change these formulas. I can do what I like. So just think about how you could use that in your business. Maybe you in your own consulting business, everybody, you'd want to see the impact of improving your debtors and your delay there. Well, you could play with it at the cash flow forecasting module. All right, now the final component of this quick overview, everybody, is this 30-day cash flow forecast. This is very useful for those customers that do need to analyze the short-term cash flow, and those customers that are very worried about that. This is invaluable. So what it does is it uses the line items, the filters here, the PAYG, your PAYE in South Africa, the GST or VAT, the wages, the credits, open purchase orders, the creditors invoices, the debtors invoices, and so on. It uses all of those, and you can determine how these impact your cash flow. So the first thing we need to do is we need to set up these components and you do that under the cash flow. You'd set up your GST and VAT option here, whether you pay it monthly, etc. You enter the data. On the wages, you decide how you pay in monthly, bi-monthly, weekly. You might have a variety of staff that get paid on monthly and a variety of staff that get paid weekly. That's easy, you just set up the various options. And then PAYE, then you decide what that is, enter the data, and you save that information. And then that information will be taken into account on your 30-day. So you can choose what components to include here on the 30-day cash flow. And here's my 30-day in the actual grid. So you can choose what components to show. So for example, if I am not worried about the open purchase orders on creditors, and I'm not worried about my debtors open sales orders, we get rid of that, and you can see that changes the cash flow at the bottom. And so we move it across. I'll just add those again. The same with my banking option. I can choose what to exclude from the bank. So for example, if you decide to exclude wages from the bank, which you wouldn't do, but just as example, then when I do that, it'll take away the wages impact here as well. So I'll just show you how it impacts. If I go to wages, I'll show you wages at the bottom here. Here's wages here, you can see down here, and I'm paying wages twice a month. There was wages on the 6th, and I'm paying wages on the 50th. Let's exclude that from the bank, and that changes the cash flow, as you can see. So that's very useful for the accountant to play with the information, and there's no spreadsheet exhaustion as such. So that's pretty good as well. You can also, one final feature, you can also click on some of these particular items within the actual drill down. So for example, if I wanted to see what creditor invoices were being displayed here, I can click on that and I can say who I'm paying on that particular date for outstanding invoice supplies payable on Thursday, the 1st of December. And the same with perhaps the creditors, and what is that other one? Debtors invoices there. Let's see who we're paying on the debtors invoice on Wednesday the 7th as well. So very useful, very powerful software, and there is a very brief overview of the 3 key function areas of Cash Manager, everybody.